Welcome back to the session. We will start. Let me share the screen first. So is it all right? Is the screen seen? I hope it's seen.
Yes, sir.
Okay, where we stopped last week, we discussed about the accounting quality, how the quality or the possibilities that the quality can be impaired under different situations, whereas we looked and talked about 5 different types of quality aspects. And discuss a little bit in detail how we could use financial information given in the financial statements to detect or extract some information to determine whether managers are likely to have engaged in income management practices or not, where we use a model called soft and hard components. By connecting soft and hard components to return on net operating assets, where our argument was that we check only the soft component. Why? That is the only one which could be manipulated and not the free cash flow. Then we found a way to look into this analysis, and initial investigation is being carried out like this by doing a comparison over a reasonable period of time to see whether there were any fluctuations in return on net operating assets. If it is, then the second step would be taken.
Excuse me.
Hello. Yeah.
Excuse me. Can you a little bit explain about the hard and soft?
I've used this. I can't hear you properly. Yeah. Say it again.
There is a slide that mention hard and soft.
Yeah.
A little bit. Can you explain again, sir?
Yeah. The idea is this. It comes from this particular equation of cash flow statement. Remember, we reformatted the cash flow statement where it was proven that operating income is nothing but something that consists of free cash flow and changes in net operating asset, right? So changes in net operating asset is the connection between the distribution and the net impact of distribution and investment. So when we look at the free cash flow exists in the form of cash. You generate cash flows from operation, not accounting profit, on cash basis. So therefore, we'll take a simple example. Your business has cash, just started 100 million. You carried out operation only on cash basis, generated 120 million. Therefore,
that means that with the financial, not only the operation.
No, all the operations. Like if you just take into all the operations, so finally we look at only the operating profit. Just for the simplicity, my example is 100 million created 120 million. Assuming that there are no investment or any other things for the time being. What's the free cash flow now? Free cash flow generated is 20. That is the operating income. 120 minus 100 is 20. Right? So, in terms of assets, just take a simple example, right? You everything is in form of cash. 100 million, 120 cash. So free cash flow generated during the period is 20. It is reflected in a total asset 100. At the beginning it was 100, now 120. Change in net operating asset, how much? 20. So therefore, this can be linked with the operating income, whereby the hard component, that is the free cash flow, cannot be altered, because if there is an increase in say cash, right? So you record these things either in the cash or equivalent, cash equivalent and any other things. You can easily check. That is the argument. Therefore, we say that in a situation where managers have manipulated the financial statements, there is no possibility that they can manipulate the free cash flow. There's no point of checking it. But had they manipulated, instead of 120, had they manipulated it to 130 by putting a bogus sales figure, then the sales value goes up, operating income also goes up. But when it comes to the free cash flow, still 20. But the changes in net operating asset, the difference is highlighted. So that is the place where we touch. That is why we say that the place where the managers can manipulate is not the hard component, but the soft component. Keeping that thing in mind, we will continue this analysis. This is our analysis. Argument is this: had we done, again, just to little bit explanation, if we have done something here in the net operating assets, right? Had it been manipulated, what does it mean? There are no real operating assets, right? But you have inflated it. But operating assets have their own capacity or ability to generate value. So return on net operating asset is always measured by taking operating income of 1 year divided by net operating assets at the end of the previous year or the beginning of the year. This particular ratio must be more or less the same over the time, unless we have manipulated net operating assets. If you have manipulated the net operating assets, of course, that would be reflected in the operating income, but not represented by the changes in the free cash flow. So keeping that argument in mind, we do this analysis. This analysis tells us whether there are significant deviations in the return on net operating assets. Simply speaking, argument is that if the income has not been manipulated, RNOA cannot significantly change. So here, the manipulated situation, it has changed. Therefore, we come to a conclusion that there could be suspicions that it has been manipulated. That is the calculation. That's why I ask you to do the same calculation or same analysis with regard to the financial statements on which you are working for your individual assignment or the group assignment. You better think of the group assignment, so that would be due after sometimes after your examination. You can include this analysis as well. Is that clear?
Okay, sir.
Okay. Then we talked about two directions of manipulation. Individual tools may be there, items, elements would be many, but all those things can be put into two baskets. One is all those manipulations are done with a view to shift the income from the current year to next. That is what we call banking. Or we try to book more income in the current year at the expense of future years. That is called borrowing. Borrowing from future or deferring to future. These are the two things that will happen at the end of the day, because periodic concept entity is continuing as a going concern. Therefore, the progress or the performance of the entity cannot be how to say completely measured during one particular year. But one particular year tells you the next or contribution for that particular period, which is connected to the continuing amount. That is how we have to understand. So that is why when financial statements are prepared, they are done based on one fundamental accounting assumption called going concern assumption. We assume that it will continue. So now we will look at some specific items, balance sheet items are managed to increase the income in general in any organization. Gross revenue, gross receivable, net receivable, lease receivable, inventories, prepaid expenses, property, plant and equipment, intangible assets, deferred charges. Deferred charges are such as deferred revenue or things like that. Flashpoints are some indications which will just poke you, just check whether they're like you're giving you signals about, in a way, there are some alerts, some contracts with multiple deliverables. Sometimes there could be contract with customers to do certain things, sell these and these service provision. Likewise, complicated, complex contracts are seen with customers. That could be a situation of increasing your gross receivables. And net receivables also, um, bank loans, lost reserves, and variables with low credit quality, and the reversals in receivables. Likewise, you can think of lease receivables, where when a lessor, because in a lease transaction, lessor is there, one who provides the leasing facility, and the lessee. Flashpoints, practical flashpoints have been found in the cases of aircraft leases, computer in the sense, not laptop or small computer, the mainframe computer is a big one, right? Equipment leases. Even you can recall the incidents in Sri Lankan Airlines. There was, that is from the lessee's point of view. Of course, the same thing must be there in the lessor's point of view as well. So that is why that Airbus company located in Toulouse was sued in UK, and it was fine. The verdict was given, like, to impose a huge fine on that particular company. Why? It was found that Airbus company had given so many commissions to different countries, including Sri Lankan CEO then, right? What is his name? Kapila Chandrasen. But no investigations were carried out. But later on, another incident took place, just a cancellation of these leases. So if you see these kind of information in your financial statements or in any other reports, you need to pay more attention. So they are likely and more risky areas. Inventories is, of course, if there are changes, differences between net realizable value and the cost, obsolete stocks, and again another danger arises when the slow moving items, value of slow moving items increase or change significantly. Prepaid expenses can be taken as, but most of the cases, except some few advances, things like that, significant amount cannot be seen. Property, plant and equipment, of course, could be seen, especially additional point can be taken in nowadays. IFRSs or SLFRSs allow revaluation. So revaluation fluctuations, increases, decreases, it goes here and there. That is a kind of manipulation with the revaluation. Unless there is a specific reason, it can't fluctuate over time. If the value appreciates, it appreciates. Appreciates, depreciate, appreciate, depreciate. So kind of a manipulation. So likewise, I can skip the different items can be taken. Even in the case of liabilities, deferred revenue may be true with respect to an organization which have a large client base. It's possible. For example, maybe telecommunication, energy like electricity, utility like water would be possible. Of course, accrued expenses. Other day also I explained you are the common vehicles for entities to manipulate income. Therefore, if you do a research or any other study on income management, you can't exclude accrual expenses. Then pension liabilities and unpaid claim over reserves sometimes. So if long lasting unclaimed balances are there, that could lead to kind of manipulation. To do a good quality analysis before moving on to any other specific doubtful areas pertaining to industries and financial information in general, when we engage in quality analysis, these things should be kept in mind. Apart from specific reasons, you need to have a very good understanding about the business. So what business is it, or does the entity engage in, like in the case of Sri Lanka, airline industry, hotel, tourism. So it is more likely in heavy manufacturing also. There are certain areas, ways for managers to manipulate, especially in Sri Lankan context nowadays, in the bank and financing industry. Lots of opportunities are there to manipulate with interest, the changes in interest rates or changes in exchange rates, and this kind of manipulation can happen even at the company level or at the government level as well. Still, I have a very big doubt with the government. I don't know whether you guys remember it or not. Maybe several months ago, exchange rate quickly went up. It was around 180 for a long period of time. Then gradually it was not possible to control. It crossed the level of 200 something. What happened? Within a couple of days, government took a decision to re-establish its exchange rate at 187 or 85 somewhere. Remember? But that lasted only for one day. Only for one day. And the following day, it again went up to 100, 200 something. What could have happened during that particular time? Still doubtful, no investigation has been carried out. On that particular day, central bank insisted the banks to release or trade in dollars at the rate of 185. So had you had made some arrangements in advance, definitely your known people, like whoever who had the connection, must have um, bought large quantities of dollars at that particular rate for sure. The following day, you can easily sell them by keeping a huge profit margin, or you can transfer these things somewhere else. Otherwise, I do not see any other specific reason for the government to keep the rate at that low only for a short period of time. So that try to understand the business environment, accounting policy of the entity, business areas, and given the particular situation about the management, and all those things will help you to do a careful analysis about the quality. Now, we will quickly go through general accounting areas, so pertaining to some industries as well: banking, computer hardware, computer software, retailing. You see, in the banking, it is a fact that bankers can play with something called non-performing assets, NPA, or non-performing loans, or whatever it is. Quality of loan provisions, credit losses can be. There are lots of provisions are there due to rescheduling and dormant accounts, transferring here and there, suspension of interest accruing. If you do a detailed investigation, those things can be found, especially when it comes to public banks. computer hardware, of course, that particular business, new products would come, technological change, uh, value of inventory also would change as a result. Manipulation possibilities are there. Computer software, though that is a possible area, that possibility links with intangible asset. Some of the costs incurred to develop software and the valuation and all those things will be, there are two areas. One is development of the software as a product. Other one is a development of software to run your business. So there are two things. So whatever it is, those recognitions of software have to be done in accordance with accounting standards. So accounting standards for intangibles, the software would be intangible. Little bit leverage. Freedom is there for the managers to misinterpret or manage the income. Retailing, again, the credit clauses, the provision for warranties, loyalty provisions, or that is a possible area in Sri Lanka. You know that the points for loyalty cards, warranty points, these things can be easily manipulated. Even warranties come along with the manufacturing as well. So that is warranties for repairs and replacements. Automobile industry, again, the quality of um, depreciation, like what is meant by the quality of depreciation allowances. That means whether they can claim for some allowances for tax purposes. If you are engaged in that industry, since the number of vehicles are high, and there would be a possibility. And again, when we have not only automobile in the sense, not the transportation, airlines, or any other, something, a situation like this, the pandemic situation, your assets are not in a position to be put in operations, then under capacity situation may be there. That's also another possibility. Telecommunication, of course, deals with the technology. Leasing already we talked about. And tobacco or any other areas, the risky industries, where they are criticized for environmental degradation and health issues, so that they can play with some provisions pertaining to making them good, or some CSR activities, or any other provision for damages, something like that is pretty much possible and obvious. And the pharmaceutical industry. So it is not seen in Sri Lankan context, but in other countries, actually, this is an industry where lots of billions of dollars are spent for research and development. So simply speaking, where you can manipulate these, the places where you allocate lots of resources. Even in the government budget case, more likely that lots of manipulation, frauds, more commission, wastage can take place in the budget proposals where lots of money is being, in other areas need not to worry. So then you need to keep an eye on this Dhamma Samaga Pilisana. So huge amount has been allocated, that is 42 billion compared to other expenses. Real estate, aircraft and shipbuilding. So they are already discussed. These are the institutional situations. Up to now, we discussed about the accounting areas. Now, institutional situations. In general, if the institution or the firm, any firm, no matter what industry it is in a need of capital, raising capital either through borrowing or going for new issuance of shares, the clue, you better carefully look at the details of new financing, sources of new financing, whether it is a public offering or any other refinancing arrangement, what are the related, whether there are any commissions, related party transactions. So likewise, you need to think of when an entity is in a need of obtaining more capital. So that gives rise to possibilities for manipulation. So remember, there was news still, yeah, it is a fact as of now, 7% from a particular loan which the government intends to take from somewhere, I don't know from where, for petroleum corporation or in the energy sector, 7% has been given to an individual. It amounted to some millions of dollars. So that is a situation where entity faces a capital requirement. So wherever we are in the need of raising capital, there is a greater chance for manipulation. Debt covenants are likely to be violated already. I think I explained about these debt covenants. Debt covenants are, as of now, you have borrowed some money, whereby the lender has asked you to do certain things and not to do certain things. They are the debt covenants. You are supposed to maintain the liquidity position. Good example, nowadays, you know, what is the tendency that in Sri Lankan context about the interest rate in the future? What would happen? What is your prediction about the likely interest rates in Sri Lanka? Will it go up or go down or stagnate? Yes?
Will go up, sir?
Yeah, definitely. So already indications are there. It will go up. When it goes up, here now bankers and other financial institutions are engaged in financial market operations, in addition to capital market operation, where they must have engaged in money market by buying and selling treasury bills, treasury bonds, and all those things. And had those companies bought, had they already bought large quantity of treasury bills and bonds, where the previous maybe couple of months ago the interest rates were low, in a rising interest regime, what would happen to the fair values of those assets, financial securities? Fair value will go down because most of those instruments are accounted under fair value through profit and loss. If that's the case, unless you change your accounting policy by giving a reasonable reason, you are in a trouble now. So the value of those financial assets accounted at fair value through profit and loss will certainly go down. Then there is a greater risk that they would manipulate it. Why? That would lead to lower level of core capital. You know that financial institutions and banks are supposed to comply with other regulatory requirements imposed by the central bank and the Finance Act, Finance Company, and the Banking Act. In addition, international compliance requirement of Basel III requirement. So if those banks cannot maintain the core capital, right, and other required capitals, that would be problematic. It's see, if you are interested in, you can think of doing a research about the impact of these decisions, or impacts of a prevalent situation, or increasing interest rate regime on the general management or manipulation, or on other consequences of banks and financial institutions. Maybe case study or selected study would be interesting in the future. Change in management. If key managerial personnel are changed, that means there could be something wrong. If the auditor is being changed, unless you have a specific reason or the auditor withdraws from the client, normally client keeps the same auditor, because auditor does lots of work in arranging its financial statements and audit, carrying out the audit, that and so on. But if all of a sudden, if the auditor is being changed, it implies something, it signals something. And management rewards are connected to earnings, where you need to look at companies which have offered employee share ownership scheme. Another researchable area. In Sri Lanka, lots, yeah, I can say lots, but I can't remember the exact number, especially banks and big conglomerates have offered these kind of schemes. Better check how and under what circumstances they take place. From time to time, sometimes these executive stocks options are repricing, you change. There is an incident with regard to, I think, John Keels. They set prices, option prices of shares offered to managers somewhere relatively high. But due to the prevailing market conditions developed, which were inevitable, it looked like that those prices or the managers will not be able to push the price level up to that level by improving the performance. So that they happen to reprice with the approval of authorities as well. A weak governance structure. So this is another area which we have ignored. Weak governance structure. That means, again, you read a little bit more about the different elements and dimension of the board governance, connection between board and management. I explained basic relationship between. This has to be established. Even if you have a very good governance structure, it does not warrant that the things function smoothly. Still, there are possibilities. But if you do not have a good governance mechanism, it means that it's very open for managers to manipulate these things. It's a matter of whether they are ethical enough not to do these kind of things or not. You know that as long as managers work and live and carry out their operations in a market economy always encourages and motivates you to maximize your own utility. Then there are no any other reservations or reasons for us to think that no, they would become so saint or so highly genuine, trustworthy, even though there are opportunities, they will not know. It's not the case. Whenever they see the opportunity, they do it. So that's the nature of the society as of now. It doesn't mean that it would be the same all the time. And we audit committee, sometimes audit committee chairman is not independent and they are being influenced by the top management. You need to check. Another researchable area is this governance structure, quality of governance structure. You can check the subcommittee, their profile, how meetings have been conducted, what decisions have been taken, what follow-up actions have been taken with regard to those decisions. So the board decision, interpretative or qualitative analysis of board decision can be done. Maybe thematic analysis of board decision would be a very good research. In the regulatory ratio requirement, it's applicable only with respect to banks and financial institutions, where they are supposed to maintain a certain amount of what you call required or statutory requirements. Transactions are with related parties, you see. So that is another area. But unfortunately, I have just observed most of big corporations in Sri Lanka, so-called big corporations, my goodness, your annual report contains pages and pages, sometimes more than 10, 20, 30, right? Even more than maybe 50 pages to talk about related party transaction details. Some details are not adequate, but you can do a research um, about related party transaction. Special events, union negotiation, proxy rights needs to be investigated. You know, sometimes the annual general meeting, uh, small shareholders do not attend. Small shareholders normally do not attend. Assume that you have bought shares, 100 shares, 1,000 shares, 10,000 shares of the company. It's unlikely that you would attend the AGM because you do not have any reason unless you want to learn how an AGM is conducted, or if you have a very keen interest of being at an annual general meeting, you do not go. That's the reality. Then they also do not worry. Why? Um, your participation is not that important. Things are taken place based on the majority's wish. As of now, they hold it. It's not going to be that much significant. But due to some other reason, I mean, there are some divisions. And again, if you want to take some decision and implement, then what happens is in your managers, board of directors would ask you, I mean, just get a confirmation. If you are a small shareholder, there's 1,000 shares, they contact you and ask, would it be all right for you to give us the permission or to the board to act as a proxy? We are going to take the decision at the general meeting, maybe new issuance of shares, maybe investment and all those things. If whenever they have a doubt that the decision or the resolution cannot be passed at the AGM, they ask for the force, not forcing, like in a way, convincing, okay, could you give your proxy status to us? Some selected, that's possible. If you get something like this, that means you are influencing your buyers. There could be something wrong with regard to that investment. The firm is in a play as a takeover target. This is again unique situation. If you are not performing very well and your operations are connected to other entities in the same industry or wherever in other industries, there is a greater chance that your company would be a hostile takeover. Others would try to take over. Under what circumstances? One is just to offer the existing shareholders some kind of, entire value of the corporate company, agree with managers and directors and buy. So that is a clean way of doing a transaction, straight the forward way of doing transaction. Alternatively, when shares are traded on a stock exchange, there is a possibility when the prices significantly go down, you can acquire as many shares you want until it reaches the level that you want, either directly or indirectly. That means you can deploy so many actors who act on behalf of you, right? Actors buy shares in agreement with some identified shareholders in that way, whatever. So think of it, that might lead to manipulation. Then the firm engages in exotic arrangement, structured off-balance sheet financing, or any other arrangement such as debt diffusions. So these are what we call exotic arrangement. It's more hyper type transactions. Then again, financial statement indicators. If you look at the financial statements up to now, we talked about the institutional situation. When you go through the financial statements, if there are changes in accounting policies, better check. Earnings surprise, quick earnings, either that could be a result of big bath, better check. a drop in profitability after a period of good profitability. So you have been doing pretty well in a way all the time. All of a sudden, it drops. Better check. Like in the case of overall economic growth of Sri Lanka, of course, it was declining. If you take 2020, um, it was declining. It is a fact that it finally it ended up with 3.6 negative. But what happened? Where did you see the manipulation? In the third quarter. First quarter, it was minus something. Second quarter, second quarter, I suppose. Second quarter, third quarter, maybe. All of a sudden, the results of 2 quarters came together. All of a sudden, fourth quarter showed a positive result, whereas third quarter showed a negative 16.5%. It is a clear, deliberate manipulation. To show that, so you wanted to end the year saying that you are on the right path to recoup the economy and turn around the economy and take care of the general public. But it's not the reality. How did you pass this particular message? You purposefully deferred your revenue in the quarter 3, shifted them to quarter 4. All the expenses and the revenue also shifted to quarter 4, and all the expenses which were due to be incurred in quarter 2, some, not all, were advanced to quarter 3. That is, as a result, quarter 3 result was 16.5 minus. That is the lowest, significantly lowest negative growth in the Sri Lankan history. Constant sales or falling sales, earnings growing faster than sales, need to be very careful. Sales are growing at a rate of 8%, but earnings are growing at 12-15%. There should be a concern. Then very low earnings. You need to check why. May lead to shifting. Still, the financial statements, small or zero increases in profit margin. Sometimes profit margin may not have increased, not the gross profit, but other net profit or operating profit margins may indicate something. A firm meets analysts' earnings expectation, but like have a look. Analysts may have predicted and mentioned that these are the possible numbers, expectations. So this entity or the country agency can have 5% growth. So that had been predicted in advance. You also ended up with somewhere closer to 5%. Then you better check why. It could be real, could be due to manipulation as well, because the prediction or expectation may have been arranged in such a way that, so that is a good indication that if you can reach there, but once you reach that, what does it mean? That means not only that the prediction is correct, but also your performance are healthy. That is why predictors were able to predict in that way. You have done the job well. That's the idea. Differences in expenses for tax reporting and financial reporting. Another key area where deferred tax involves. If you have learned about deferred taxation, this is also another researchable area, because the provision for deferred tax asset and liability, I don't say that can be purposefully manipulated, but can be managed with the proper interpretation, with genuine reasons. Purposefully, it could be managed. If the deferred tax asset and the deferred tax liability takes high figures or significant amounts, better check. Likely manipulation may have happened. And again, accounting adjustments to the previous year, always. This has become a practice. You may see this thing even in the recent budget. Some adjustment revisions. So now we talk about 2020 budget, 2022. Along with that, The budget, revised budget for 2021 has also been given, but that is, those numbers are significantly different from the original budget which was presented at the parliament in 2020. Got it? So you better see. So these are some tests. I hope you can leisurely look at these things. I need not to explain all those things. You would understand what each test will reveal if you look at these possibilities of happening or giving you some evidence that managers may have engaged in income management or the manipulation. Pertaining to this is pertaining to revenue manipulation. This is pertaining to still the revenue sales manipulation. This is expense manipulation, if there are any expense manipulation, or any overall manipulation can be found from that equation, hard and soft component analysis. And operating accruals, if there are if we assume that operating accruals have been manipulated, you can engage in this kind of test. This is what we call restated operating income. Then you reconcile your restated operating income with the free cash flow plus change in sales divided by normal asset turnover ratio. Here you need not to worry about the reformulation because it takes time. You can take the total assets and do the calculation on the argument that assets are capable of generating more or less return from the assets over the time. So these are the connection between return on net operating asset and asset turnover ratio and the profit margin. So it has been just given under different circumstances and different years. The same thing here. The idea is always if there is any manipulation or the reflection in the return on net operating asset, that could be found from the changes in asset turnover ratio, not from the margin. Investigate the line items, that is about normal expenses. I don't want to discuss. So here, expense manipulation could be detected from these specific examinations. Why? Financial statements contain both income statement, that is the statement of profit or loss, balance sheet, and cash flow. Both statement, profit and loss, and the balance sheet are prepared on accrual basis, whereas the cash flows is prepared on cash basis. Same thing, but from two different perspectives. So where can you manipulate? Not the cash. That the main purpose why cash flow statement has been recommended by accounting standard setting bodies, that you can't manipulate it. It doesn't mean that you don't have any fruits. If there are any leakages, it can be detected. You can't manipulate it. Whenever you have 100 million, you can't claim that you have 120 million, right? So you got the point. So that's the idea. Therefore, the difference between income, so difference of income between, or according to the cash flow statement and the statement of profit or loss, could only be due to manipulation in accruals if you have engaged in income management. So that is why we go for this particular accrual test, where we get the cash flows from operations. Operating income must be more or less similar to cash from operating activities. If you have manipulated, this fluctuates over time. Then you can detect, there could be something. Again, the same cash from operations can be reconciled, relatively measured with respect to average or year-end or year beginning net operating assets. The other one is individual accruals. You can go one by one, visually, depending. So I would skip this as well. Then the extension of expense manipulation. What is important, I will discuss. So all those things were discussed. So Ola expenses. Right. So that is why finally we say that cash flow statement, the statement of cash flows, is a tool for you to reconcile and check any doubtful areas and information presented in the income statement and the balance sheet on accrual basis. R&D, already I just explained you. Then this already explained. Now, I would like to, finally, you can think of the number of detection red flags and the indication may be found from the efficiency of your investigation. That investigation has to be done from a critical perspective, analytical perspective. Then lots of things can be highlighted for you there, whereby you can conclude, okay, whether there are suspicions or not. Anyhow, I'm not going to discuss all those things. These were not there in the slides uploaded. So therefore, I replaced that one and replace that one with this. So you better download the new one. I will send this to Ayesha now. She will upload, asking her to replace or maybe simply upload. Please read these red flags. I am not going to discuss about these things unless you ask question. If you want, you can study and think more. If you want further clarification, you can ask questions, or if you want to share your experience about these red flags, we can take them up during the class. Otherwise, it is up to you, your homework. You do all these exercises carefully, and the extension to this homework is better think of extracting some annual reports from Sri Lankan context and try to find out some kind of red flags. So as I just told you, LOLC, this revelation of related party transaction is a red flag in a way. So information is not yet released, but red flags are there at what price and what could be. So specific red flags also may be found. Better read, select one or two companies and download the annual reports. Even you can do the same exercise based on, now you have two annual reports. One is the annual report on which you develop your group presentation, group assignment. The other one is the annual report based on which you do your individual assignment. Think, further read, not the entire annual report, but when you read the financial statements together with the notes and accounting policies, you will find some red flags. Sometimes some red flags are seen to be green flags as well. So positive information would also be there, additional information. Either red or green, you better check there. So lots of several exercises are there. Please go through all. Channel stuffing, fair value accounting, this also must be very interesting. And nowadays, Sri Lankan company seems we follow SLFRSs, fair value accounting and fair value measurement are relevant for us. Whenever some accounting standard asks us to do something, for instance, revaluation of property, plant and equipment, the revaluation should be done on a fair value basis, either by getting the real or the respective market values from an efficient market, or appoint a valuer to do the valuation based on fundamental analysis. Whatever it is, it reflects the fair value. Right. At the end, you must be able to talk about the disclosure policy. No matter how best you have adopted or you have complied with accounting policies um, with bona fide. That means to provide high quality information to the users of financial statements. You do not have any intention of manipulating things. Your intention was to carry out your conduct in an ethical manner. So you did it, but there will not be any use if you stop at that level. You did it, but you did not communicate. Therefore, the disclosure is also important. Disclosure is very important. It is not simply marketing or just engage in advocacy advertising. Without they being disclosed, users of financial statements do not have any means of accessing to the data. So whereby disclosure, the quality, you need to look at and analyze whether the information has been disclosed in a property. Because if it's undisclosed, you can't measure the quality unless you go and find, okay, this thing has happened, there is no corresponding disclosure according to the accounting standards, right? So accounting standard, each and every accounting standard has provisions of disclosure requirements. If you want, you can do this kind of comparison whether companies comply with the exact disclosure requirements. So just to comply with this thing, or do companies disclose information with the view and intention of providing more quality information for the users of financial statements to take decisions? So this kind of question can be asked. Even hypothesis testing can be done. Even quantitative survey can be done. Yes or no question can be asked and conclude something. That's also possible. But if you want to go to deep analysis, you can do that even. So this is an area for sure, because information disclosures, to me, have lots of problems. Some disclosures are there. They are with vague statements, jargons, confusion. No one can conclude something that could maybe no one question the real things happen somewhere else, and therefore there is no point of analyzing all those things. They are least bothered about the things. Even wrong information may not be questioned. But if you want to do research or learn something, you can take that into account. Okay. With that, finally, there is an area, if you want, another researchable area. If you want, you can develop something called composite quality scoring. This is up to you. There are some composite quality scoring schemes, models developed by other researchers. You can borrow one of those models and test this thing with some selected companies in Sri Lanka. That's one. Or you can develop a separate composite quality score for a particular industry, maybe manufacturing, banking, likewise, or maybe any other sample. If you want to come out with the quality scoring framework, of course, you need to take into account several companies. Unless you go to a qualitative study of just doing a DEX research, that is also possible to develop this thing. One is to develop a composite quality score. Other one is a test the level of quality of financial information by looking at the information provided in the financial statement through a developed or borrowed composite quality scoring framework. I just gave you lots of avenues and information to do research, because you know the reason I'm highly interested in research. So that is the end for today's discussion. Next week, we will take up income analysis, persistent income, and growth analysis, growth perspective of a company. The significance of a growth in sales, profit, cash flows for companies going concern, and what really contributes for the growth, what really creates value will be discussed next week. I will upload the presentation, and this one I'll immediately after the lecture, I can send this presentation to Ayesha. Ayesha will upload it. Yeah, with that we can conclude if you do not have any question. Do you have any question? It seems like there are no questions, so that we will end up the session for today. Thank you very much for being and contributing by presenting this thing and engaging and asking questions. So always just try to do more and more, try to interact more and more, whereby we can learn and discuss more. Because the importance of this particular subject really depends on how best you interact, why it deals with information and analysis. Analysis matters. Analysis means always we are questioning and dealing with information, and we do not make bold or just vague statements. Okay, with that, let me conclude today's session and have a nice weekend. See you next week. Bye bye.
Thank you, sir.
Thanks, sir.